Ed, good to see you, sir. The return of the memes suggests to me the mania of crowds and little more.
Yeah, I think it's a phenomenon that clearly is associated with social media. It's easy to get a flash mob or a flash crowd together with social media. And this is kind of the analogy that I see between what occasionally happens on social media and what we're seeing happening in the stock market. I think there's a lot of speculators that feel like they can get together using social media and move a stock one way or the other, having nothing at all to do with the fundamentals. So it is a mania.
There is, yeah, I was going to say, is there any connection to the fundamentals of the stocks we mentioned there, AMC, Bed Bath & Beyond, and others? Number one, that's number one. And number two, I wonder why the meme, I hate to call them investors because I don't really think that's what they're doing. But what the meme players keep playing the same stocks. Why don't they move on to something else?
It's a really good question. I don't really have an answer to that. Maybe they're kind of stuck on these names and they figure they've already got everybody focused on these names and it's easy to get everybody.
Stuck on you. What's that?
Stuck on you.
Stuck on you. That's the old.
Yeah, no, I agree with you.
Like glue.
Yeah, right. Yeah, I think that's got to be it.
Yeah.
So, I mean, you look at these things not as people who are playing them. This is a game. This is not an investment strategy, right?
Right.
Yeah.
Yeah. I mean, it's in many ways sort of an outgrowth of social media and gaming. And, if you can make a quick buck or, a lot of bucks in short time playing this flash mob phenomenon, then why not? And to focus on a few stocks makes sense because you can really move them. If you start to diversify the portfolio of meme stocks, that might wear off.
Lionel Richie is who I couldn't think of.
Is that
the brain is.
I think I had a different song in mind. Yeah. And I always look at it as well as a sort of emblematic of what's going on in markets. We know a year and a half ago, 2 years ago, the meme stocks told you there was way too much liquidity in the system. What is it telling you now?
May very well be saying the same thing all over again. The S&P 500 bottomed on June 16th. And I think the reason it bottomed is because investors started to conclude that maybe we'd seen peak inflation, bond yields started coming down, commodity prices started coming down. So all that kind of made sense, but that also alerted speculators that maybe it's safe now to come back and play the game and that there is enough liquidity to do so.
Shepard Smith here. Thanks for watching CNBC on YouTube.